This show is part of OnePlace, a daily network of focused briefings across the stories people follow most.
Welcome to our daily roundup. We are diving into the biggest shifts in global energy, finance, and technology, bringing you the essential details on the stories shaping our world today.
Energy traders scramble as oil markets face unprecedented volatility.
Investors favor the US dollar over gold during conflict.
Missile debris strikes Oracle's Dubai office amid rising threats.
Indian markets brace for volatility ahead of central bank meetings.
AI expert predicts the rise of dark factory coding.
A British businessman faces a nightmare ordeal in Dubai.
Waitrose worker sacked after trying to stop a shoplifter.
Turkish family preserves 5 generations of handmade baklava tradition.
Let's start with energy. The energy sector is currently reeling from the sudden escalation of conflict in the Middle East, particularly following the drone strikes on Tehran. When traders returned to their desks on that fateful Monday in March, they were met with a market nightmare: the shutdown of the Strait of Hormuz. This vital trade route is the lifeblood of global oil and gas flows, and its closure sent prices into a tailspin of volatility. One analyst shared a story of a trader who shorted the market right before the strikes, losing millions because he simply didn't believe a war was imminent. It highlights the sheer unpredictability of the current climate. Brent crude has seen some of its steepest one-month gains ever recorded, creating a high-stakes environment where fortunes are made or lost in hours. For those managing physical cargoes, the logistical challenges are becoming nearly impossible to solve.
It is not just about the price on a screen, it is a massive logistical puzzle. We are seeing tankers loaded with millions of barrels of crude making literal U-turns in the Atlantic. They are being diverted from their original destinations in Europe to Asia, where the energy crisis is reaching a breaking point. Even liquefied natural gas tankers are changing course mid-voyage. The world's largest commodity trading houses, like Vitol and Glencore, are working around the clock to reroute the world's energy supply. While high prices might seem like a win for traders, the reality is far more stressful. If you are responsible for connecting a cargo to a buyer and the market shifts violently while the ship is at sea, you can face catastrophic losses. The industry is currently defined by fear and headlines, making every decision a gamble against geopolitical instability that shows no signs of slowing down.
Now to the dollar. In a surprising shift of financial strategy, the US dollar is currently outperforming gold as the preferred safe haven asset during this US-Iran conflict. Traditionally, investors flock to gold when war breaks out, but this time is different. The dollar index has rebounded strongly, rising over 2% in March 2026, even though the US is a direct participant in the hostilities. Meanwhile, gold prices have actually slipped by over 10% since the war began. Experts point to rising US yields as a primary driver. When interest rates are high, capital moves toward interest-bearing assets rather than non-yielding bullion like gold. This has diminished the relative attractiveness of gold, which saw a massive downward spiral after an initial spike. It is a fascinating reversal of historical market behavior, suggesting that the structural strength of the U.S. economy and its currency is currently outweighing the traditional fear-based move into precious metals.
A major factor here is the petrodollar system. Since global oil trade is still largely denominated in US dollars, and oil is the most traded commodity in the world, nations are forced to hold and transact in dollars to secure their energy supplies. As the blockade of the Strait of Hormuz pushes oil prices higher, the demand for dollars actually increases, because countries need larger reserves to cover those rising import costs. Furthermore, the U.S. is now a net oil exporter, which makes it relatively insulated from the supply disruptions that are currently hammering energy-dependent regions like Europe and Asia. With the Federal Reserve likely to keep interest rates higher for longer to combat inflation driven by these oil prices, dollar-denominated assets look even better to investors. Gold usually shines when the world is in chaos, but right now, the dollar is the king of the crisis.
Next, the Dubai strike. The physical reality of the conflict hit home for the tech industry this weekend when debris from an intercepted missile struck Oracle's offices in Dubai. While the city government described it as a minor incident with no injuries, the symbolic weight is heavy. Iran had previously issued explicit threats against U.S.-owned companies operating in the Middle East, warning workers to stay away from their offices. This strike on the facade of the Oracle building in Dubai Internet City suggests those threats are being realized. In response to the escalating danger, other tech giants like Dell have already instructed their employees to avoid travel to the region and have advised local staff to work from home. Amazon has also reported that several of its cloud computing facilities have been impacted since the war began 6 weeks ago. it is a stark reminder that the conflict is not just confined to the battlefield.
The geopolitical stakes are rising as President Trump continues to push for a resolution. He has set a strict deadline for Iran to reopen the Strait of Hormuz by April 6th, threatening severe consequences if they do not comply. The U.S. has already moved thousands of troops into the region, and the State Department is urging citizens to reconsider all travel to the United Arab Emirates due to the threat of terrorism and armed conflict. This war, which began with strikes on Tehran back in February, was intended to neutralize Iran's ballistic missile and nuclear programs. But it has instead upended the global economy. With fuel prices skyrocketing and major tech hubs now in the line of fire, the pressure on both sides to find a breakthrough is immense. For companies like Oracle and Dell, the safety of their regional workforce has become the top priority as the April deadline approaches.
Moving to Indian markets. The Indian stock market is facing its own set of challenges, having declined for 6 consecutive weeks. Investors are navigating a volatile mix of global tensions and domestic economic signals. The upcoming week is particularly crucial as the Reserve Bank of India's Monetary Policy Committee begins its first session for the new fiscal year. Market participants will be hanging on every word regarding interest rate guidance and the inflation outlook. Currently, the Nifty and Sensex are struggling to find a clear direction, often moving based on the latest news headlines rather than long-term structural trends. Foreign institutional investors have been pulling money out, and the weakening rupee is adding to the general sense of unease. Analysts suggest that any further escalation in the Middle East or a sustained rise in crude oil prices could lead to even more significant downside risks for Indian equities in the short term.
The situation is further complicated by the rhetoric coming out of Washington. President Trump has warned that he will unleash all hell if a deal isn't reached or if the Strait of Hormuz remains closed. This kind of language keeps global markets on edge, and India is particularly sensitive to these shifts because of its reliance on energy imports. While there was a brief midweek recovery in Indian stocks due to a slight dip in oil prices, the overall sentiment remains fragile. The RBI's meeting from April 6th to April 8th will be the primary domestic trigger, but it will be hard for local news to outweigh the global drama. Traders are looking for any sign of a pullback in oil prices to trigger short covering, but until there is more clarity on the U.S.-Iran front, the Indian market is likely to remain in this state of high-frequency volatility.
Now, let's discuss AI. Simon Willison, the co-creator of the Django web framework, is making waves with his prediction of the dark factory era in software development. The concept comes from factory automation, where a facility is so automated that you can literally turn the lights off because no humans are needed on the floor. Willison suggests that coding is heading in the same direction. He admits that today, about 95% of the code he produces is written by AI, not by his own hands. While we currently use a process of telling the AI what we want and then reviewing the output, the next step is trusting the AI to oversee the entire life cycle. This shift could fundamentally change the global workforce. While some believe this will create new types of jobs, others are rightfully concerned about displacement, especially as major companies like IBM and Oracle have already cited AI as a reason for recent layoffs.
The rise of what people are calling vibe coding has made it incredibly easy for anyone to bring a technical idea to life without deep programming knowledge. However, Willison warns that this doesn't mean everyone will become an overnight millionaire. As the technical barrier to entry drops, the value of having an original creative idea becomes even more important. The machines can handle the execution in the dark, but they still need a spark of human creativity to know what to build in the first place. It is a double-edged sword. The efficiency gains are massive, but the human role is shifting from builder to architect or visionary. Some companies are already telling their human staff to stop writing code altogether and focus on higher-level tasks. It is a rapid evolution that seemed like science fiction just 6 months ago, but it is quickly becoming the new standard for the industry.
Next, a Dubai ordeal. The story of British businessman Albert Douglas is a harrowing reminder of how quickly a successful life can unravel in the UAE. Once a wealthy resident of Dubai's Palm Jumeirah who drove a Rolls-Royce, Douglas found himself creeping along a barbed wire fence at the Omani border in a desperate attempt to escape. He was being held responsible for debts incurred by his son's company, a situation that led to a £2.5 million fine and a 3-year prison sentence. After losing his final appeal, he realized the legal system would not protect him and decided to flee. His escape attempt turned violent when UAE soldiers intercepted him at the border. His son, listening from London via a smuggler's phone, heard gunshots before the line went dead. It is a terrifying fall from grace that highlights the severe risks international business people can face when legal disputes arise in the region.
Albert's family believes he was taken to a military base after his capture, where he claims he was beaten and tortured. This case has drawn significant attention to the harsh realities of the UAE's legal system, especially regarding financial liabilities. For Albert, the transition from a life of luxury to being a hooded prisoner in the desert happened almost instantly. His son Wolfgang has been working tirelessly from the UK to secure his father's release, but the situation remains dire. The story serves as a cautionary tale for the thousands of expats who move to Dubai for its tax-free lifestyle and high-end amenities. While the city offers incredible opportunities, the legal consequences of business failure or debt can be life-altering. Albert Douglas went from the pinnacle of success to a desert manhunt, and his family is still fighting for justice and his safe return to the United Kingdom.
Now to retail news. In London, a Waitrose employee of 17 years has been sacked after a confrontation with a shoplifter. Walker Smith, a 54-year-old shop assistant, was alerted by a customer that someone was stealing Lind Gold Bunny Easter eggs. Smith, who has seen shoplifting happen almost every hour for the last 5 years, finally reached a breaking point. He confronted the thief and a struggle ensued over the bag of chocolate. During the scuffle, the bag broke, and the expensive Easter eggs fell to the floor. In a moment of pure frustration, Smith threw a piece of a broken chocolate bunny toward some shopping trolleys. Despite his long tenure and an immediate apology to his manager, the incident was escalated and he was ultimately dismissed. Smith, who suffers from anxiety, expressed his devastation, noting that he felt the store had become a target because security guards were not scheduled on certain days.
This story has sparked a lot of debate about the pressure retail workers are under. Smith explained that he was previously told not to approach shoplifters, but the sheer volume of theft he witnessed daily made it hard to stand by. He described a range of offenders, from teenagers to regular thieves, walking out with bottles of wine and other goods while staff felt powerless to intervene. After his dismissal, Smith was led out the back door by the bins, a moment he described as deeply demoralizing. Now, he faces the very real threat of homelessness, as he had recently moved into a studio flat and no longer has an income to cover his rent. It is a tragic outcome for a long-term employee who felt he was protecting his workplace family. The case highlights the difficult balance companies must strike between enforcing safety policies and supporting staff who are on the front lines of rising retail crime.
Finally, a culinary tradition. In the heart of Gaziantep, Turkey's culinary capital, one family is proving that some things are best left unchanged. The Imam Kagdas restaurant has been making baklava the exact same way since 1887. Now in its 5th generation of ownership, the shop is run by Burhan Kagdas, who continues the labor-intensive tradition of making everything entirely by hand. There is no automation in this kitchen. Every layer of phyllo dough is rolled out with the same precision passed down through the decades. This commitment to craft has made the shop a legendary destination for food influencers and culinary tourists from all over the world. Despite the modern pressure to scale up or use machines to increase production, the Kagdas family refuses to compromise. They believe that the soul of their baklava lies in the manual process and the heritage of their forefathers, which has sustained the business for nearly 140 years.
Visiting their kitchen is like stepping back in time. You see the mastery required to create those impossibly thin layers that give baklava its signature crunch and sweetness. Gaziantep is famous for its pistachios, and the quality of the local ingredients combined with this ancient technique creates a product that simply cannot be replicated by a machine. It is a beautiful example of how a small family business can become a global landmark by staying true to its roots. In an era where everything seems to be moving toward AI and automation, as we discussed earlier with the dark factories, Imam Kagdas stands as a testament to the enduring value of human touch and tradition. For the 5th generation, it is not just about selling a dessert. It is about preserving a piece of Turkish history. They aren't changing a single thing. And that is exactly why people keep coming back from every corner of the globe.
That wraps up our briefing for today. Thank you for joining us for these stories. We will be back tomorrow with another update on the events shaping our world.